YouTubers, Mike Martin's channel. Got an article that was just sent to me, and it's a really good one. I want to read to you guys. Happy New Year, by the way, January 1st. What the housing market could look like in 2017. I wanted to bring this one up because it's a really, really hot topic. Financial expert Preet Banjiri looks at 3 things that could possibly expect in 2017 housing market. Canadians coast to coast love to talk about the cost of homes, and 2016 was a hot year for the housing market in many cities. I've been talking about since 2014. But experts say you shouldn't necessarily expect the same this coming year. Here's what is likely to happen to the Canadian housing market in 2017. Number 1, Toronto will stay hot. The GTA will be the strongest market in 2017, said James Laird, co-founder of RateHub and website that compares mortgage rates. He attributes this to simple supply and demand. There aren't a lot of detached and semi-detached houses, he said, and lots of people want them, which all continue to push for higher prices. Sal Guatieri, senior economist at BMO Capital Research, think that the Toronto market will cool a little bit, but overall remain and stay very strong in 2017. We'll probably continue to see the price increases, but not on the order of 20%, more like the mid-single digits for next year in Toronto. Number 2, Vancouver could cool. Well, it's been cooling a lot lately, so let's see what she says about. Let's see what they say about this. Here's where opinions disagree. Guatieri believes Vancouver prices will continue to fall in 2017 as they started at the end of 2016, likely at least partially in response to the province's foreign buyer tax. Paul Taylor, president and CEO of Mortgage Professionals of Canada, isn't sure that the issue for him, again, is supply and demand, means that prices could start to climb. Again, he said, these are world-class cities. Vancouver is beautiful, and Toronto is a financial hub. So in comparison to other global real estate markets that you put in the same category, it's actually still quite a long way upwards that those values could increase, even comparable to those in other cities. That's a really good one right there. Everywhere else will cool slightly after Number three, I'm sorry, I'm getting ahead of myself here. Everywhere else will cool slightly or stay the same. Taylor thinks that recent changes to mortgage rules will end up cooling the housing market a little outside Toronto and Vancouver. These changes, introduced in October and November, will require homebuyers looking forward for an insured mortgage to pass the stress test and qualify for mortgage rate at 5-year Bank of Canada posted rate, which are typically much higher than the rate offered by banks. Another change requires that buyers put a larger down payment on houses worth more than $500,000. There's nothing worth less than $500,000, so I don't know who they're kidding with that. Taylor thinks this could reduce the purchasing power of first-time buyers, and not just in the hot markets of Toronto and Vancouver. You're going to see price reductions in a lot of places where the economy is already quite weak comparatively, he said. Laird is optimistic. Alberta housing will stabilize in 2017, he said, largely due to the price of oil slowly climbing back up and oil-related layoffs having worked their way through the market already. Guatieri also thinks that most of Canada's housing market will be fine, with healthy, steady growth and modest increase in prices. But a lot of Canadians are leaving. Canadian brain drain. A lot of Canadians with degrees are going to the United States. A lot of nurses are going down to Florida to live. Arizona. A lot of skilled trade are leaving. Breaking into the housing market will even get harder. This is number 4. Those mortgage rule changes will result in first-time home buyers losing about 20% of their purchasing power, said Taylor. Guatieri puts the number closer to 10 to 14%. More income to keep buyers' debt service ratio in appropriate level. 40% is okay. Anything higher than 40% on your TDS, you know what happens? You're living off credit. Guatieri puts the number closer to 10 to 14%. More income to keep buyers' debt service ratio in appropriate level. But whatever the number The bottom line is first-time home buyers are going to have to come up with bigger down payments and qualify for higher mortgage rates. This likely means they will have to buy cheaper houses or just continue to rent. You don't have to rent, just move south. Just if you have a degree in like if you're in nursing, doctor, or just move south. Just apply and they'll hire you, they'll sponsor you. Go to parts of Arizona, buy a house for 140 grand. Go to Miami, go to Ocala, Florida. Ocala, Florida is growing. Go up to Ocala. Look it up on the map. Ocala, Florida. Ocala, Ocala, whatever. Number 5, Donald Trump will indirectly affect the Canadian housing market. Yes, Donald Trump could be partially, if remotely, to blame for the rising mortgage rates of Canada. What, do they want America to continue working off their little Ponzi scheme that they're working on? Bond yields are pushing up from rock bottom lows, said Laird. This is largely created by the Trump election and some policies that he has started to announce. Higher bond yields means higher borrowing costs for banks, said Guatieri, and the banks are passing those costs on to the consumer. It's called the Trump bump. Even higher mortgage rates for Canadians. If you're looking, you know what? Because America has been having this party with this cute quantitative easing for so many years now. For what, the last 15 years, they've been quantitatively easing the stress in America by printing off money and creating money out of thin air. And what's happening? It's devaluing the American dollar. Trump just wants to fix that and make America great again, okay? And I'm not sponsored by Donald Trump. If you're looking to buy your first home in the next few months, you should get pre-approved for a mortgage now before the rates go up, said Laird. Anyone considering shopping in the springtime in the next 3 to 4 months, they should get a prepaid approval today because they could hold on to today's rates for up to 4 months. So people, if you're thinking about buying right now, don't buy nothing right now. I recommend that you stay away from buying anything right now. Stay away. Wait 2-3 years. Wait till the summer. I have a feeling, and I've been saying this in my past videos in the last year and a half, 2 years, there's going to be a mini crash come March. The mini crash is going to start making the market look like it's more appealable, more appealing to buy. And I think when summer hits, it's going to be the final crash. And I think that a province cannot sustain itself on housing. BC is big. Its economy is based off housing and student loans, and I don't think they could base that off. I don't. It's really hard to base it off that, an economy off that. BC needs to start charging countries for its water instead of giving them for the price of nothing, giving away free water. Start charging countries for water. Start charging countries for resources. We don't owe anything to anybody, okay? So if somebody wants to take our water, you pay for it. You know, if someone wants to take our oil, you pay for it. You don't get it on loan and then, oh, we'll protect you militarily if anything happens. Yeah, right. Anyways, it's usually the people protecting us are the ones we need to worry about the most. Anyways, guys, put that in your pipe and smoke it. Let me know what you guys think. I mean, most of these people in these articles, writing these articles, I don't know if they've been on another planet for a while or they haven't been watching the trends here in Vancouver, but nothing's been selling. And now, every month you get more and more houses on the market. Like I said, you're going to have divorces, you're going to have inheritances, you're going to have other things where we're going to force people to throw things on the market, and guess what? They're going to start devaluating them and say, let it go for 600. I don't care if it's worth $1 million. I just want my money. I want out. You know, and then that's what's going to start happening, and that's going to start, the comparables are going to start pushing themselves down. Once you start to see comparables all going down in different areas, well, this guy sold for 600. Why can't you sell it for that much? Well, you know, I got this laminated flooring in mine. He didn't. No, well, it doesn't work like that. Let me know what you guys think. Comment below. Bye.